Hello and welcome to Big Deal. I'm Nisha Poddar. Now, it's been a blockbuster year for deal makers as it turned out to be a year of block deals, with M&A activity being quite muted this year. Now, block deals worth close to about $15 billion changed hands in the year, largest ever seen in the Indian markets. Private equity, venture capital made exits worth over $10 billion. And this ruled the Deal Street theme for 2023. Let's discuss the key highlights of 2023, the learnings, and crystal gaze into the year 2024 with deal makers Zia Mody and Salil Pitale. Thank you so much for joining us right here on CNBC TV 18. Zia Mody, how do you see the year 2023? What stood out for you the most?
So, the good and the bad, the disappointment for any intermediary like ourselves was the much more muted approach by private equity. There was a distinct pause, re-engaging on valuation. The mismatch story had still sorted itself out. So where you would typically see somebody doing 10 deals, you would see them doing 5. Each deal would take longer instead of 4 months, 6 months, 8 months. So that was a bit of a slowdown from our perspective. We did see some good deals, which stood out as marquee deals. However, we also saw the domestic market and the domestic M&A picking up more than before. Renewables remained a bright spot from what we could see. A lot of auctions, a lot of bidding, people really wanting to be able to say that we are developing and going green, etc. You see the IPO market not slowing down. Tata Technologies was, of course, fantastic, where investors felt that, as always, the house left something on the table for them. But as you can see, whenever you open the newspapers every day, there's one IPO after another. So maybe for this year, it was not as slow as I would have thought at the beginning of the year. Yes. We now have to see after January it slows down because of the elections, but certainly it has been a pleasant surprise, as Salil I'm sure will validate.
That's right, Zia. In fact, that stood out quite emphatically for this particular year, because the previous year, 2022, was quite slow when it came to the IPOs. So IPOs made a comeback. And Salil, throw more light on this. On the IPO side, a lot of it was also growth capital, but they were mid-sized. What stands out in the IPO theme that really played out for this year?
So you're right, Nisha. The IPO theme was a lot more mid-size rather than the blockbuster big-size ones. If you recollect, we had a lot of them in calendar 21 or end of FY22. There was a bit of a pause or a slightly more muted approach last financial year. The IPO market kind of again restarted with the likes of Mankind Pharma early part of the year in April. 4,300 crore transaction and so on. But subsequently, we've seen that there's been a fair amount of mid-market activity on public markets on the IPO side. There haven't been the mega transactions, but there have been the mid-size, the 1,000, 2,000 crore kind of a transactions, or some of them even smaller. The interesting part has been the kind of investor interest that we've seen in these deals. Mind you, this is 1 year wherein we've seen that the balance of power in terms of domestic participation in these transactions in IPOs has been just fantastic, maybe exemplified by the fact that a lot of the mutual funds have fantastic ongoing monthly SIP flows coming in, so they need to deploy. Towards the end of the year, calendar year, we also saw FI participation coming back with a bang. One data point that really stands out for me essentially is that this year, if you take a net flows of a calendar year, this net flows between FIs and domestics, it's close to $40 billion. That's, almost 3.4 trillion rupees. And as against that, the kind of IPO paper or even the QIP's paper is far lesser compared to the amount of money which has been available. So that's resulted in, a lot of such deals getting, strong oversubscription. There's a lot of chasing for quality transactions because people want to deploy capital after good companies.
Yes.
So that's come out well. And last part is, I think,
Uh,
the kind of companies that have hit the market by and large on the main board have been really good quality names.
Yes, good quality, and from the house of Tatas, Zia Mody, after almost 2 decades, an IPO offering, and what a blockbuster IPO that one was. But that's not the only one. You've been working closely with so many conglomerates, including Tatas, JSW Infra listed after almost 14 years of last listing. Reliance Industries also listed, not an IPO, but listed its financial services arm. So that became a theme for this particular year, Zia.
Absolutely. And what I wanted to ask Salil, I don't have the statistics, but earlier in earlier years, we used to say that the opening price was 100, but it traded down the first day to less than that. I've seen less of that right now. Is that correct? Would you say that the trading down also has been less?
Yeah, I
Uh,
mean,
yes.
see, I mean, just to give you the statistic out of the IPOs till December, and there are a few of them which are listing now, but even excluding them, out of about 43 IPOs which hit the markets in this financial year, I'm talking April till now, 90% of them have traded up, which is a very, very strong statistic,
That's right.
90%. And even in the current crop of IPOs which are hitting the markets right now, we've done one opening today, Inox, which is up, 45%. There's been, there are two or three more out there likely to come out. We're seeing a lot more positive traction there. I think it's a 90 plus, closer to 95% number in this year.
So that's the point, right, Nisha? That
Yes.
it's not trading down, it's trading up, and that again is reinforcing what Salil is saying, that SIPs need to be deployed and the mutual funds are active, and therefore the retail participation is high, and therefore the stock is not trading down.
That's right. But Zia, the equity market overall also has been on a run-up mode. And a lot of factors have really contributed to that. And a lot of fillip was also given by US Fed's comments, which were taken very positively, and also the state elections. So that looked like a preview for the union elections. Salil, Pitale, while we're talking about IPOs, there are many other things to speak about, but one important question on everybody's mind: how do you see the markets sustaining at these levels, and also IPO stream ahead of the elections next year? Because that's going to be a very, very important variable to watch out for.
Sure, Nisha. I think quite a few parameters at play which will decide this. I think the first parameter was, political stability, uncertainty, and the likes around it. Markets believe with the kind of state election results have come in that there could be continuity around that. So that's stability gives a lot of comfort to markets. In terms of sectors, in terms of global economy, I think India clearly stands out compared to the rest of the world. So a lot of I mean, we're the growth economy and we're doing really well. There's a lot of manufacturing related area activities which are getting centered into the Indian context. Manufacturing not just for domestic, but manufacturing for the world. So what we do see as themes coming out over the next 1 year, next calendar year, is fundraisers of companies which are generally in the industrial domain, which is manufacturing, across different categories of it, defense and so on. We do see a lot of action going ahead on technology, by the way. A new age technology was, a sector which was euphoric and then got battered down. But I would think next year we'll see some of the good quality names of businesses which have scaled up, started becoming profitable. Those are the categories of companies that could hit the markets. I think consumer as a theme is very much always there in India, and I think you'll see opportunities coming out of those segments. Even traditional IT services, there are niche elements coming out of IT services companies. So some of those will be, marketplace. So all in all, I would think, there should be some good amount of excitement in the kind of quality of names that will hit the markets. You could expect to see some of the bigger names coming in. The biggest IPO this year was probably less than 5,000 crores in terms of size. But and there was a time when we've seen 10,000 crore plus deals.
Yes.
We haven't seen that last year. We would potentially see at least the 5,000 crore plus transactions hitting the markets. You could also see a little bit more on the QIP fundraise as we go along. We saw a glimmer of that in the later part as some of the banks and the financials raised some money out of the markets. Given that there is a need for deployment of capital into paper, so there's a there
That's
could be an
right.
opportunity for quality paper to get access to this capital ahead.
All right. So it's a lot of action and the pipeline is strong for the next year. But Zia Mody, the private equity players are the happiest lot for this particular year. Over $10 billion of exits made, and the market equity window gave enough returns to them and even complete exit opportunities. What do you make of this particular big theme for this year?
So I think it's a combination of several things, Nisha. One is that, all these private equity players have raised new funds, which they have to deploy. And these are exits from their older funds, which need to be returned to the LPs. There's nothing as happy as a LP who gets a return, because he can then say that he has received the return and he redeploys it in the new fund. The new fund is dry powder, so that is waiting to be invested. But exits are a sure sign that the PE here knows what they're doing. Even with the rupee depreciating, the returns, as I understand it, have been pretty decent in dollar returns. And I think some funds are just reached their life, need to be wound down. I think others, private equity, have taken the call. This is the right time, with the market being at a high, to get rid of a chunk of their shares and to basically go back and sell the India story. A lot of funds are now not trying to only raise global funds, but South Asia funds. And in the South Asia funds, India is getting a much larger part of the allocation than before.
Yes.
I think a couple of factors that are happening.
Yes, that's a very important takeaway, that the deployment to India has risen for most of these investors as well, looking at the growth potential. Salil Pitale, what do you think about the blocks that have taken place in terms of the pipeline going forward? Are we left with some more for this particular year? And how is the opening of the next year looking like in terms of pipeline?
No, I think the blocks activity is continuing as we come towards the last week of the month. People do go on holidays, so therefore you could expect a little bit muted around this. But mind you, a lot of companies where blocks do take place have silent periods which start out of the post 1st Jan. So I would still not rule out, in spite of holiday season, that you could still see some more action for the last week of the year also.
That's like a path-breaking development, and the theme that really played out. It has been very surprising, and even in the REIT space, there were many takers for Blackstone to really exit its investment in Embassy REIT. All right, with that, we'll slip into a short breather. Zia, Salil, hold on to your thoughts. Lots more to discuss about what lies ahead on the deal street for the year 2024. Stay tuned. Welcome back. You're watching Big Deal, and we are summarizing the deal-making year 2023 and what lies ahead in the new year. Zia Mody and Salil Pitale are in discussion. Now, Zia, you earlier mentioned about the M&A. M&A overall has been muted for this year and have been much smaller than many other years in the past. But you did mention that domestic M&A did see a little bit of pickup. How do you see this? What stands out for you? And for the next year, are we having a stronger pipeline than what we saw in 2023? I think you're on mute, Zia.
I said, I think that's definitely the hope. We are already seeing the green shoots of more deal activity on the PE side. Much more ideation, much more opportunities. We are also seeing much more of an auction process rather than exclusivity, simply because so many people are chasing fewer deals. On the domestic side, I think our corporate houses are smelling out opportunities where smaller industries may be undergoing some promoter challenges, fighting between the families, not being able to really increase or scale up because of capex issues, and identifying those opportunities and bolting them on and sort of putting them into their entire ecosystem and world. I think the digital space will continue to see more activity. And the fintech space is not to be written off.
Yes.
You look at the UPI payment record that the government published, you're looking at 92 crore transactions in 17-18 to 8,375 crore transactions in 22-23. That's just crazy, right? And so all this will require back-ended support. And then you look at logistics, data centers, the need for power, the requirement of localization, infrastructure in general leading up to the elections. So there has to be M&A activity for that. I think airports, ports, all these will start developing much more in the next 2-3 years, according to me.
Oh, so you mentioned many such themes that could develop, and one theme that really came out emphatically this year was the hospitals deal, and it carries forward to the next year as well. Zia, how is the corporate mood as we enter into 2024, and especially of the large conglomerates?
My view is it's positive. If you just look at what they've been doing, if you look at Tata's, you can see the M&A that they've been doing, IPO, as you say, Tata Motors is on a high, steel is doing well, chemicals is doing well, TCS, I mean, the house is just doing well. If you look at Reliance, you see that they've done a blockbuster of a listing with Jio Financial Services. They've made clear that they want to be very high on energy. I don't think there's any area in which they don't want to foray, and once they foray, they are a force to reckon with, disruptive in their excellence of execution. And then you have Birla's. Kumar is looking, I think, at a lot more areas. He's looked at paints. He's certainly not forgotten cements by any stretch of imagination.
Yes.
And then you have the Adani Group that is still acquiring and being acquisitive. So I don't see why that deal activity should stop, provided the prices are right. And so far, I think even though the stock market is a unholy euphoria, I think that as long as the stock market is stable, people's sentiments to be able to pay more for a deal will be there.
Unholy euphoria, you said it, Zia Mody, and Salil, add to that. Of course, it gave a lot of opportunities, lot of blocks, lots of IPOs, and people are happy, investors in general are happy with stock markets. But the flip side is that it did mute and suppress the M&A stream to a large extent. In fact, a lot of private equity players tell me that it's becoming very difficult to strike a deal in the private market because private market and public market valuations have a huge gap now.
True, what you're saying is right, Nisha. Private markets got the competition from public markets because, public markets were keen to deploy, and there was therefore loss of deal from private to public. But, what could also play out as we go along, and I'll refer to what Zia said a little earlier, was this encashment on private equity today through exits on some of their portfolio companies ensures that there will be a stronger flow of capital back to private equity in India. Especially some of the top tier ones, and that will be vying for deployment. So you would see good quality deployment coming from the private markets, maybe competing stronger for situations. A lot more buyout activity can get driven by private equity who wants to deploy a larger amount of capital today in the Indian context. So you might see a comeback of private equity driven M&A opportunities coming out in the next calendar year for sure. I think the other part is that with the richer set of valuations for public market companies and corporate India in general, it creates a stronger currency again available for doing acquisitions.
Yes.
So I thematically a few things will happen. There will be well-built businesses who are looking at a generational change, and the next generation probably wants to be, let's say, a family office rather than run the business. So they're quality businesses which could change hands and could go to either private equity or to corporate India. Both have the currency to be able to do these acquisitions. There's a second category of M&A which will happen in India is that, the younger companies, the new age tech companies saw a bit of funding winter coming in, which
Yes.
means that capital not necessarily available for them. Now, not all of them can be painted in the same brush, because there are some very good quality companies who may not have got the access to capital, which will get acquisition, which has the access to buyers who have capital to do that. So we are fairly enthused that we also see these kind of M&A themes, coming out over the next year or so. And
Yes.
a euphoric market is always a currency for doing these acquisitions.
Point well made there, Salil. Final word to you, Zia Mody, and very quick answer expected. Market regulator tightening its nose on various sectors. Your view on that?
The regulator is concerned, as always, and as it should be. I think that possibly a slightly softer touch would be appreciated by the market. I think the regulator is concerned about any opacity, asymmetry of information, and to make sure that the public shareholder is basically well informed and gets its due. I think the cost of regulatory compliance has just shot up, and there are sometimes many honest mistakes.
Yes.
And those have to be recognized, I think, as just honest mistakes, and to move on.
All right. Thank you so much, Zia Mody, as well as Salil Pitale, for giving us important takeaways and also crystal gazing into what lies ahead for deal making in 2024, expected to be a robust year. Thank you so much for joining us right here on CNBC TV 18, and thanks to all our viewers for tuning in.